Okay, welcome back to Infinite Investors episode 38 special of the portfolio update. I'm calling it 38 special because one, it's episode 38, and two, I've been taking some shots right now. I've been shooting my shots on a few different stocks. So today we're going to talk about three new stocks that I've bought. We're going to talk about my 2020 dividend planning. We're going to talk about the top three stocks of this week and the bottom three stocks of this week and the reason why they are the top and the bottom. And then I'm going to talk a bit at the end about Andrew Bailey. So if you want to know more, please like, please comment, please subscribe. Help the channel reach 3,000 subscribers and we can get the world of investing out to more people in a clear, simple and transparent manner. But first, let's get into the new stocks that I bought. I know you guys really want to know about that. And the first on the list that I've bought is Akhter. So for those of you that don't know who Akhter is or what Akhter does, Akhter is an identity and access management cloud platform. They basically provide secure authentication services for enterprise clients. And one thing that really attracted me to Akhter is their past performance. So they had 112% growth in the last year, which you can see reflected in this graph right now. And within their sector, which is the US IT sector, that performed 50% year on year. So the sector is quite a good sector anyway, but this stock happened to perform better than the sector. Even if it doesn't sustain that level of growth for next year, I still think the level of growth and the momentum is going to carry it through to next year. And I've got some other reasons for that as well. And obviously that beat the US market, which is performing about 33%. In terms of their Q3 revenue, they grew 45% year over year, and their subscription revenue grew 48% year over year. And, if we look at some of their other, financial outlook targets for 2020, they're expecting a total revenue of 155 million to go to 156 million, representing a growth rate of 35% year on year. They are expecting a reduction in their operating loss. So they are currently a loss-making organization. They aren't making a profit, which is why if you go to Simply Wall Street, you will see their growth forecast at like 0.9% because that's based on earnings rather than revenue. But their loss per share should be reduced from 0.05 to 0.04. So they've got a little bit more cash flow as well. They have got a good what they call remaining performance obligations, and this is basically, it's kind of like an order book. It basically says that there's these obligations that if they continue doing what they're doing, there's a lot of money that's going to come into them from some of their enterprise clients. So I think they've got a lot of money coming into them, and I think they're going to continue and sustain their growth into next year. But also, one other reason why I invested into them is because I do think they're an easy acquisition target. Some of these smaller cloud-based platforms, it's an easy target for, say, the likes of Amazon or the likes of Google just to pay a premium and take control of this organization. And obviously, as a shareholder, if they do that, then you'll benefit from whatever premium they pay for the share. So I think Akhter personally is still a good buy. There is a lot of talks from a negative standpoint that actually it's surged too high and you should wait for Akhter to dip. Like I've always said, if Akhter does dip 10%, 20%, let's say by March it's 30% down from the time that I bought, then I'm just going to put a lot more money into it. I've bought this because I do think that by the end of 2020, I will have realized some gains, and maybe if I realize it earlier, I might sell. However, I do think that Akhter is a good buy. So that was the first stock that I've basically added to the portfolio. The second stock that I added to the portfolio is PayPal. They've had a 39% earnings growth, whereas the same sector, 50% for the US IT and 33% for the US market. PayPal's been established for quite some time, so I don't expect their earnings growth to always be 40% plus, but I did say the 40% was my target. 39%, it's just slightly less, so I'm not going to be too nitpicky on that. They've got an absolutely undeniable balance sheet. They've pretty much got little to no debt whatsoever. They've got great cash flow, great assets. Their balance sheet is phenomenal, and they've got some great businesses that they've acquired, one of them being Venmo, which is mainly in North America, and also Braintree, which is basically like a Stripe equivalent for enterprise clients. And they've got Uber, Deliveroo and loads of major clients clients that basically use that platform. And for me, it's just, again, economies of scale. I like some of those businesses that they've basically acquired. Some of those businesses are growing as well. And also, I think that's going to contribute to PayPal's bottom line. So that's the reason why I invested in PayPal. I think there's going to be a lot of growth with PayPal going forward. And I think it's one of the safer growth stocks because of their balance sheet as well. The last one, which is a much more risky investment, but I had to do it. I had to bite the bullet. I've invested into Uber. Now, they've got a predicted growth of 47.6% over the next year. I really like some of their other businesses, so freight being one of them. I think that's a very lucrative and untapped market which they can really own and dominate that space. It's a very traditional market in terms of the logistics of shipping and carriers and hauliers. I don't think it's a market that many consumers really know about. So I think because Uber's gone into it, it's going to, one, raise awareness of that market and the amount of costs and traditional costs that shippers and hauliers typically have to pay with the current providers. Uber can really democratize that space. So I'm really looking at freights as, you know what, in the next 1 or 2 years, that could be a phenomenal business. They are going to start increasing things like their ride fares as well slightly. They've got obviously a global presence, which you all know. I think their share price has been severely depressed since their IPO. So I think right now it's kind of consolidating and bottoming out as a potential opportunity to buy. They've also potentially are looking to sell off one of their Uber Eats businesses within India to Zomato as well. So I think if they do that, because Uber Eats is one of those businesses that actually it probably costs them more than they actually generate, that could actually do well for their balance sheet. And we've seen the likes of, say, when Vodafone sell off parts of their businesses, what that can do to the share price. I'm going to talk a bit about that later as well. So I think for me, those are good indications. Also, the CEO, Dara, I'm not going to say his last name, he just bought 250,000 shares, which is about 6.8 million, and that was in late November. He done that. So I believe anytime a CEO is investing into their own business, yeah, granted, he's obviously got a lot of money anyway, but I think he's showing a sign of intent that he's actually putting skin in the game and he actually believes in what they're planning within the business. So I personally see that as a good sign. So yeah, get in the comments. Let me know if you want me to do detailed vids on Akhter, PayPal, and Uber, and why I invested into those 3 stocks. I'm more than happy to do so, but get in the comments. I want to see like good 20-30 comments about that, and then I'll probably produce a video on that. On to my 2020 dividend planning. So what I've started looking at is when the next ex-dividend dates are forecasted for some of my drip stocks, my UK undervalued and my UK dividend stocks. And the majority of the main ones are all forecast to be around April, which is great for me because it's not so early. What that basically means is that gives me about 3 solid months, actually 4 solid months or 3.5 months for, say, the likes of Aviva or the likes of, say, Illegal in general to basically try and, not only dollar cost average, but hoard as much cash as I possibly can and drop it into these stocks to start actually kickstart my 2020 dividend payments in a good fashion. And I'm really wanting to supercharge that. You guys saw in my 2020 vision that I'm going to try and make sure that 40% of my portfolio is allocated to this, 50% is allocated to the growth stocks. And you've seen obviously some of the newer additions to the growth stocks that I've just spoke about. So yeah, the majority of Aviva, Legal in general, Taylor Wimpey, Lloyd's as well, most of them are forecast to be paying their next ex-dividend date to be in April. I will keep monitoring it. Just because it's forecast, it doesn't mean it's guaranteed to be at then. It could be a bit earlier, could be a bit later. So it's worth always staying abreast of it. But I probably won't check it again until like February and see what happens. But yeah, I would definitely encourage you guys to look at your stocks and see when they're next paying their dividends for 2020. And then you can kind of work backwards from those dates and then try and work out, okay, cool. If they're paying my dividends in March or something, that's giving me 2 to 3 months to actually start adding some more money. What does my cash flow look like over the next 2 to 3 months? How much could I realistically add, rather than just be surprised that, oh my goodness, I hold this stock and it's just past its ex-dividend date and I could have added more. So I always encourage you guys to just do a little bit of research and just work out and plan with your current portfolio, not even new stocks, but your current portfolio, what's basically happening, so you can basically take advantage of that. In terms of the top 3 stocks, top 3 performers this week, the first one is AMD. You guys know this is my first 2020 vision stock. and you can see that, in the last 7 days, it's basically gone up. Well, free trade is saying 4 point. What? Why is this not scrolling up? This is crazy. Sorry, 4.25%. Simply Wall Street is saying 7.32%. One of the reasons why AMD has gone up this week and is the top performing stock for me is that there's a lot of analysts that have raised their price targets to AMD to $51, just because they're just a bit more bullish in terms of the production and the quality of their chipset for 2020. So that's very interesting. I might actually, because of that, just put in a bit more money. My whole thing is, this remove watchlist button is in the wrong place. Sorry, free trade. It's in the wrong place because I can't scroll up or down without pressing this button. Yeah, so I think let's just put it up in the top corner here somewhere. Sorry, I digress. But yeah, because of that chipset situation, that's basically, caused analysts to be a little bit more bullish, and that's one of the reasons why the stock has gone up. So I might try and put a little bit more money. I've got my minimum 1,000 in there, currently sitting at 17.8% profit, and obviously I only just invested a few weeks back. So I'm really happy with AMD so far, and it's continuing to do well. The next stock, one of the new acquisitions that's done well this week, is actually Uber. And the benefit of Uber, I mean, for me, it's only 0.36% up because I only got it yesterday or whatever. But the reason why Uber's gone up is similar to what I just mentioned before. They are looking, and they announced to sell their Uber Eats India business to Zomato. And if they do that, that's going to obviously reduce a lot of their debt liabilities, and give them more cash flow to reinvest into other areas of the business. So because of that, Uber went up about 6.8% this week as well. So that's really good. And the third one, which is going to be one that you're probably going to be surprised at, I know I'm surprised at it, is Imperial Brands. So we know that Imperial Brands shot up based off the whole elections. Yeah, this watch list button, I can't even scroll down. That's getting crazy. We know it shot up basically due to the whole election situation, but one of the other benefits this week is that it's at a 52-year low when you look at it from a technical standpoint. And so I think people are seeing this currently as a buying opportunity, and I see Imperial Brands as a buying opportunity when you're looking at it throughout the course of the last 365 days. So I think because of that, people are actually adding money into it from a technical standpoint, and I still think that it's had a very, very bad year. Ideally, if I was to do stock market again for the last year, I probably would never have bought this stock. But now that I'm in, I need to do the right thing by it, which is to invest into it, average it down. And I do think the performance will slowly increase, and, my hard work will be rewarded. Let's go to the bottom three performers of this week. The first of the three is Lansec. So for that, we got to go to the basic side because that is not here within the ISA. Free trade, if you're listening, please get REITs into the ISA, man. I really, really want my REITs in the ISA. They just pay quarterly dividends, man, and that is something I just do not want to have to worry about tax. Anyway, I digress. Lansec, they've dropped 5.88% this week. And there's no real news or information as to why they've potentially dropped. This could just be, market sentiment reacting to, the correction of, the great performance we had over the last week due to the whole election scenario. So that could be that. The next stock that's dropped 6.37% according to Simply Wall Street is Sentiment. So Sentiment always has a rocky ride, and I'm going to do a little bit more research into what the movements and the sort of pros and cons of Sentiment in terms of its falls are, because sometimes it rises because the economy's bad, but sometimes when the economy's good it rises as well, and that's probably due to production. I think the majority of the business here is to do with the whole ongoing Endeavour takeover saga, but really and truly with Endeavour potentially trying to take it over, that should actually provide an increase in growth in the Sentiment stock. We saw it do that last week or the week before, so maybe there's some chatter there. So I'm going to look into that a little bit more. But for me, if it goes down, then that for me, as you know, is a BO situation, a buying opportunity, and I'll definitely add more, during my next round of investing as well. And the last one that has dropped significantly, which is the one that rose the most last week, is Virgin Money. Listen, I'm still 27% up, but I was like 48% up. You saw in last week's update. The reason is because Barclays, the bloody hater, is downgraded Virgin Money. They've looked at some of their cash, their assets, their loans, etc., and so they downgraded the stock. And that's partly the reason why this week you can see that on, you know, free trade it says 9.19, on Simply Wall Street it's saying 14% drop this week. Me personally, I'm still long on Virgin Money. I've always been long on Virgin Money, and I'll continue to do so. So I see this 14% drop or this 9% drop as a great entry point, and I'm going to continue to add more towards the end of the month during my next round of investing. Now, last thing I wanted to talk to you about is that Andrew Bailey, if you don't know the name, you're going to get used to the name, because you're probably going to hear that name a lot over the coming weeks, months, years, etc. He's been appointed the new head of the Bank of England. He's basically taken over Mark Carney. His previous experience was the CEO of the FCA, so he's got that regulatory experience. I don't think the markets, if we look at the markets over the last 7 days, I don't think the markets have responded really to his appointment with any great, you know, optimism or pessimism. I think his regulatory experience is what, you know, Sajid Javid, you know, really thought that, you know, taking us out of the Brexit situation and, you know, making sure that our financial situation, our policies, you know, are secure is probably one of the reasons. There's a lot of debate as to whether he was the right appointment or not. So for me, it's just going to be interesting to see what happens with that situation, you know. And I did say in my last video about the top 10 lessons I've learned in the market, the whole economic landscape and situation you should try and monitor closely, because that tends to have quite a dynamic impact on your stock performance, irrespective of, you know, the stocks that you've chosen. So that's going to be interesting to see whether this is a pro or whether this is a con over the next, you know, coming 12 months. But yeah, that's all I wanted to talk to you about today. Try and keep it short and sweet. Hopefully you found this useful. You know, I'm not going to do another portfolio update until next Saturday. So for those of you, have a great holidays, have a Merry Christmas if you celebrate it, and I will catch you next week with another investment video. Take care, guys. Peace.